Welcome back to Bitcoin Treasuries. I'm Tim Kotzman here with Dan Hillery. Dan, Happy New Year. How's it going at Brown University?
Nice to be here, Tim. It's going really well. It's winter, it's a little cold, but it's sunny out today, and that's kind of a nice thing.
Right before we started, we were talking about the potential medium to long term, I guess, in my view, stabilization of the annual CAGR of Bitcoin and what that might mean for the asset class. We want to start off talking about that. For example, if, as you said, if Wall Street starts marketing Bitcoin as a 25% CAGR, then everyone just goes and buys Bitcoin, or how does that play out?
Yeah, I think that's kind of the most interesting thing about the Bitcoin ETFs. And a lot of people have talked about it in different ways, whether that be Fred Krueger talking about the power law or other folks talking about stock to flow, or people are trying to model this asset. And all institutional investment strategies are marketed as sort of a risk on, risk off, expected compound annual growth rate, right? You look at the S&P, and that's most people's sort of introduction into an ETF or exchange traded fund where their money is highly diversified and will steadily grow over time. And it's not concentrated risk in any one sort of asset or any one equity. And so the whole idea is that you're kind of de-risked and compounding over time and exposed to the entire US equities market. I think Bitcoin, I think of it as a index for global productivity. So I think of it as kind of a funneling the technological increase in production efficiency across the world into a monetary sort of store of value, and that's Bitcoin. So Bitcoin is like the S&P just for everything great that happens in the world, in my opinion. But the real point of that is that you're trying to capture that long-term upside with the S&P 500, right? With Bitcoin, it's kind of the same idea. Right now, it's being adopted, and so it's very unstable or very volatile. But as it continues to decrease in volatility, you're going to see a stabilization of returns. And when Wall Street makes this flip to marketing it as a 25% compound annual growth rate asset, it's kind of game over. I think it's going to be hard for people to diversify into index funds when they have a vehicle that's compounding more quickly and it doesn't have the counterparty risk of an equity. But I think the switch there is the marketing, because you look at the S&P's historical returns, it's a little over 11% with dividends reinvested for the past 50 years, compounded annually. That doesn't mean it's going to do 11% this year. It doesn't mean it's going to do 11% in 2 years, right? Like all that is a future projection of historical performance. So Bitcoin's price projections would be the same thing. Like if traditional finance were to put a expected compound annual growth rate on Bitcoin, although Bitcoin's more volatile, it would have the same sort of bearing as the S&P 500 expected return, right? There's no promise that the S&P is going to return X amount of money moving forward. And there's no promise that Bitcoin is either. But over a long time horizon, now that Bitcoin's kind of been institutionalized as an asset class, you can expect it to grow. And with that institutionalized adoption, I think it has cleared the way for a predicted CAGR, and that predicted CAGR will make a lot more people much more comfortable investing in Bitcoin.
What do you think the most effective way for Wall Street to actually communicate that? What would that be? Meaning, are you saying an average of 25% compound annual growth rate? Because historically, Bitcoin's been above that, whether you call it 50 or 60%. Like, would it make more sense to start with, 2025, we expect it to go up, 50%, and then kind of ratchet that back as the years go by? Or like, because everything's marketing, especially and messaging. How do you think through that?
I think I think you're right, and that Bitcoin, like the big players in Bitcoin have been refining that sales pitch, which is no one's lost money in Bitcoin over a 4 year period, or Bitcoin's CAGR is 50% over the past 4 years. Like those are all sales pitches that try to raise money to invest in Bitcoin. But I think the slowly decreasing CAGR is a good sort of proxy for monetary adoption plus productivity. Like I think people do understand the idea of a decreasing CAGR and then at some point a stabilization. I know when I'm trying to sell Bitcoin to someone, I typically say, well, the CAGR has been this, the compound annual growth rate. It seems to be decreasing over time, slowly. That doesn't mean there's crazy upswings and crazy downswings, but it seems to be decreasing. And then the next question that people tend to ask is, but what happens? Doesn't it stabilize, right? When everyone has Bitcoin, does it stabilize? And then you can explain to them, well, you've got this S&P 500 index, it's doing 11% a year. You've got the global M2 money supply doing 6%, increasing at 6%, and you've got 4% GDP growth. So like all those factors come into play to determine the stabilization rate of Bitcoin. But then I usually follow up with saying, well, that's going to be far in the future. But regardless, I think have these mental models and projections of a compound annual growth rate over long periods of time, one, legitimize the asset class to people. Like if you just say Bitcoin's going to have a 25% CAGR for the next 4 years, even if you and I think it's going to be much higher, that that plants the seed in that person's head that Bitcoin's going to be around in 4 years. Some people don't even think it's going to be around in 4 years. So giving a compound annual growth rate makes them kind of believe that or start to think that may be possible. And then assigning values also takes out some of the uncertainty that's inherent in people's minds, right? When people are so scared of investing because there's uncertainty and risk involved, even by just giving a long-term directional sort of annual growth rate, it can soothe a lot of people's fears and help them focus on the longer term horizon, which is extremely important with something this volatile.
Hey guys, this episode is brought to you by Onramp. Bitcoin custody is evolving. Both self-custody and single third-party custody come with significant risks and trade-offs. Onramp is pioneering a new standard, multi-institution custody, which eliminates single points of failure, adding fault tolerance and redundancy to your setup. OnRamp secures your Bitcoin in a segregated, cold storage, multi-sig vault, guarded by 3 independent, institutional-grade custodians, none of which have unilateral control. Multi-institution custody removes the technical, mental, and physical burdens of private key management, providing unparalleled peace of mind for you and your loved ones. To learn more, schedule a consultation with the OnRamp team. Go to www.onrampbitcoin.com. That's a really interesting statement that some people don't believe that Bitcoin's going to be around 4 years from now. Maybe that's one extreme. And then you have Bitcoiners that, I'm sure there's some Bitcoiners out there that don't believe the US dollar is going to be around in 4 years. So maybe those are the two extremes. How do you think through these public equities that have Bitcoin on the balance sheet from a return standpoint and from a diminishing return standpoint? Because, and these are not the exact prices today, but if you have a Microstrategy at $500 a share, and you have a Semler Scientific at $50 a share, and you have like KULR at $5 a share, would people think, I'm going to buy the lowest nominal stock because it has the most room to run from a both returns and diminishing return standpoint? Or how do you think through that?
Yeah, I think that's something I need to focus on a lot more. But the way I've been approaching it mentally, at least looking between Semler and MicroStrategy, I'm by no means an expert on Semler's operating business, so I can't speak to it. But if we're switching our mindset and our framework to sort of a Bitcoin acquisition model, like the cash flow denominated in Bitcoin, then you can compare apples to apples, Semler's operating business plus the amount of BTC yield they've been able to generate against MicroStrategy's Bitcoin yield. And that's the way I look at it, right? Because MicroStrategy's operating company is largely irrelevant in terms of their actual Bitcoin treasury operations. Whereas in Semler's case, their operating company is much, much more impactful on the amount of Bitcoin they can buy. And so you have to compare that entire corporate structure of the operating company and the Bitcoin treasury strategy contained within inside of Semler to the dominating Bitcoin treasury company functions that dominate MicroStrategy. So I think if you do an honest comparison of Bitcoin acquisition per share in both cases, then you can determine for yourself which company is maybe more likely to go up into the future. Furthermore, if you're on the fence about Bitcoin, right? If you purchase a company that is half made up of their Bitcoin treasury um, strategy and half their operating company, you're de-risking your bet strictly into Bitcoin because you're buying a corporate structure that is both, you know, is valued on future cash flows and future Bitcoin price appreciation and acquisition. So I think and then moving forward, as more of these companies adopt a Bitcoin treasury reserve, you can kind of pick your threshold or your tolerance for Bitcoin exposure. And I think that's going to be really interesting moving forward, especially with these private placement bonds, convertible debt instruments. And like if there's a company that's 75% operating, their market capitalization is 75% based on future cash flows and 25% based on their Bitcoin reserve strategy, then you can purchase their convertible debt maybe through an ETF or different products that you've been talking about with your guests that will be coming available to public investors. And when you purchase that debt, you're not as exposed to Bitcoin, right? It's not a Bitcoin-backed bond. When you buy MicroStrategy convertible debt, you're buying a Bitcoin-backed bond. If you were to buy convertible debt for a company that's 75% not Bitcoin, you're buying different exposure, and maybe that's more comfortable or familiar to some people.
Can you speak a little bit more to these ETFs that are coming out that are selling basically the Bitcoin bonds from companies like MicroStrategy? And is that beneficial to both the, call it, retail investor and to MicroStrategy? Because obviously retail didn't have, to my knowledge, exposure to that before. And then on the MicroStrategy end, I think there's something where basically you don't have as many arbitragers in the market, and maybe you don't have as much delta hedging going on. I could be totally wrong about that. I'm just trying to wrap my head around all that.
Yeah, that's a good one. And I don't know the exact statistics on how many delta hedgers, how many of the private placement convertible bonds are delta hedged. I know an insurance company tends to take more of a directional position and not hedge it, whereas a convertible bond arbitrager shop would fully hedge out those bonds the second they get them, so that they're not exposed to movements in the direction of the equity of MSTR. Um, but I think those convertible bond ETFs making it accessible to the public is a huge game changer, I think, just in terms of demand and access to the product or understanding of the product, right? These big institutions are the main buyers and they're the largest players. The retail investors aren't going to change the core demand for these convertible notes. However, I think having the access to be able to invest in these convertible bonds as a retail investor will show people how valuable they actually are, right? Like when you're given the opportunity to purchase one of MicroStrategy's convertible bonds in the form of an ETF, and you're told, okay, in 8 years if Bitcoin trades, this is an unsecured, but it's senior in the capital structure, backed by Bitcoin. You as a bondholder or an ETF bondholder don't need Bitcoin's price to increase or even stay flat for this to be returned to you. Bitcoin can trade down and you'll be the first to have your principal returned. Um, but you'll still capture 80% of the upside in the case that Bitcoin and MicroStrategy perform quite well over the next, whatever it is, 8 year, 5 to 9 years, based on what, convertible bond you purchase. So I think that optionality opens up an investor's mind to understanding, wow, like now I'm a lot more comfortable because I have this bond option. I know I'll get my principal back, even if Bitcoin and MicroStrategy don't perform the way I hope, but I'm keeping that upside. And for a lot of people, that kind of bridges the cognitive dissonance and makes them much more comfortable holding for a longer time period, I think.
That makes sense. Do you want to dive into what your thoughts are for MicroStrategy's ability to acquire more Bitcoin during 2025? We've certainly seen weekly announcements of adding Bitcoin to the balance sheet there over the past 7, 8+ weeks. So, yeah, what's your forecast as we move into 2025 here?
Yeah, I mean, I'd preface that with acknowledging that the price action has been underwhelming over the past month, and I understand how easy it is to turn bearish when price is moving against you. But I've always found sort of refuge in the numbers, and so I like to go back to the basics and make sure I'm understanding and projecting out MicroStrategy's treasury operations in a way that is honest with how they've been performing, right? And so after the 21-21 plan, we have about 2 months was announced at the end of October. We have 2 months worth of data as to how they're executing on the strategy. And obviously the ATM has been performed faster than anticipated, especially into the face of a lot of sort of bullish sentiment in the stock, which allowed them to use the ATM so effectively. But we haven't seen anything other than the 3 billion of convert issuance. So I have been attempting to kind of project out continued ATM usage. I don't think that's going away. And anyone who's afraid of ATM shouldn't be holding the stock, right? Because they were very clear that this is part of the strategy going forward. And obviously, it's been hard as a shareholder, right? Seeing such a big drawdown, but this is part of the volatility. So ATM, I think, will continue to be used moving forward, which will increase their Bitcoin stack. And the increase in their Bitcoin stack will allow for more convertible debt issuance. And in my opinion, the convertible debt issuance is the actual product and is the bread and butter of the strategy. It's the most accretive way in which they can acquire Bitcoin. And so I think we can look into the beginning of 2025, hopeful that they use both their ability to convert early the current debt on their balance sheet, wipe it off, and then issue more. And that will create what I believe, a greater than expected BTC yield and increase in their Bitcoin holdings over 2025. So in terms of actual kind of targets and prices, right? It wasn't long ago, I think, and Tim, it wasn't long ago that MicroStrategy was holding 200,000 Bitcoin. And now they're at 446,000 Bitcoin. And so things happen in a very short amount of time. And the one thing that keeps really, whenever I project out their continued usage of their treasury strategy, is that the Bitcoin per share, as long as there's demand for both convertible bonds and equity, which we've seen there has been over the past month, and whether that will continue, who knows? Hopefully, we're betting on it, but it may not. Uh, the point is that the Bitcoin increases exponentially within MicroStrategy, and obviously there's some sort of carry capacity in which they have so many Bitcoin that to increase their Bitcoin percentage, it's an incredible amount of Bitcoin. So they've brought all the capital into MicroStrategy. The point is, right now MicroStrategy is still relatively small, and they're able to increase their BTC percentage very quickly, simply by bringing more capital into their corporate entity, and there seems to be no diminishing demand for both bonds and equity, even after their ambitious plan.
What are your thoughts on the announcement of the authorization, not the issuance, but the authorization of the additional shares that came out several weeks ago? Because it sounds like, and it is a large number, right? From, I believe, 330 million shares to what is it, 10 billion, 330 million shares. I know there was a lot of excitement and fear and dread and misunderstanding, especially on X, around that the sky was falling, and people kind of, I don't think, really tried to understand authorization versus issuance before they started running around and screaming.
Yeah, and again, I'm not the main guy on this one, but my understanding is that this authorization is it would include any sort of stock split. So if they were to execute another 10-to-1 stock split, then the total amount of shares outstanding that they're able to issue would still have to be above any sort of ATM usage. So let's say MicroStrategy, they have right now, correct me if I'm wrong, but it's like 250 million shares outstanding, roughly 230 million shares. It's between 200 and 250 million shares outstanding. So after a 2-to-1 stock split or 10-to-1 stock split, you'd see how the number of shares outstanding increases, and that has to still be within the authorized shares outstanding that they've just raised. So all they've given themselves is the ability to issue more shares at their discretion moving forward, accounting for maybe a stock split or two in the coming years. This includes the convertible debt issuance, right? Because there are fully diluted shares that are associated with a convert, and so to issue more convertible debt, they have to have as I understand it, they have to have the ability to issue more shares. So I think it's not as scary as people make it out to be, right? They're giving themselves optionality in the future. Uh, if you want to be really, if you want to have a reason to be scared of the ATM, let's wait until the next earnings announcement. And if they announce a 42-42 plan, I would say, okay, like we're in for some more ATM issuance, and now you can, scream and cry and be upset. But right now, I don't think there's anything to worry about.
Hey guys, today's episode is brought to you by Stampseed. If you're in cold storage, you know how important it is to protect your seed phrase. That's why I recommend you head over to stampseed.com and check it out for yourself. This seed phrase storage device is one solid piece of titanium. There are no loose pieces, and you can hammer your seed phrase in letter by letter. When you go to stampseed.com, use promo code TIM15 for a 15% discount across the website. That's TIM15. Yeah, I mean, definitely a reason to be upset when they're going to issue additional shares to turn around and immediately accretively buy more Bitcoin. It's just, I'm not sure about that strategy. So it seems like when you put Bitcoin on the balance sheet of corporation, you're increasing the volatility, but in a very real way, you're also de-risking the corporation. Can you speak to how that plays out in an options market? Because, for example, Semler didn't even have an options market until a few weeks ago. So can you kind of take us from the ground up on how all of that kind of plays together?
Yeah, absolutely. And this is kind of what I like to focus on mostly. I think different option strategies you can create are the most interesting derivative products around Bitcoin, especially on these different corporations that are now both adopting Bitcoin and having options markets and gaining options markets. So with Bitcoin, there's volatility because it's a 24/7 market. It's a very liquid market. So you get this crazy amounts of volatility, and volatility brings more people into the market who want to bet in both directions for all different time frames with all different amounts of leverage. And so that makes a very healthy options market. There's buyers or sellers coming together, people wanting to make the market, capture the spread. So the options market, as long as the volatility is there, will be healthy and strong, and there'll be lots of different opportunities present. Bitcoin also, for some of us, we think of it as kind of a risk-off asset, right? There's no counterparties. It's an index for global productivity and will be around forever. So those two things, keeping those two things in mind, you can express that idea in many different ways. So like if you're a believer in Bitcoin, you can just buy Bitcoin and hold spot forever, right? That's one way to express your belief in Bitcoin. You can also express your belief and try to monetize your belief in Bitcoin by purchasing a company that is acquiring Bitcoin per share, such as MicroStrategy or Semler Scientific, right? That's another way to express the trade. Then finally, you have all these derivative products, whether that be Bitcoin perpetual futures contracts on exchanges, or that be options contracts on a ETF such as IBIT, options contracts on Semler Scientific or MicroStrategy, in which you can express different time frames and different amounts of leverage. So let's say you were a big time believer in Bitcoin in 2025, right? And your belief was, more bullish than the prevailing market sentiment. You can express that through the options market by taking a long call position on IBIT. But what's so interesting is the option markets have all kinds of different expiration dates and all kinds of different premiums that people are willing to pay for optionality moving forward. And so one option contract that people may be familiar with is a put, right? And a put is effectively insurance. So if I were to buy a put on my IBIT shares, I now have the right to sell my IBIT shares at the strike price. And I had to pay someone a premium to give me that right. So one strategy people like to adopt is this idea of put selling, right? This idea of put selling is where a cash secured put selling, where you have a lump sum of cash and someone pays you for you to buy their shares at a certain price at a certain date in the future. So what you're doing is you're selling insurance, right, for different time frames. And I really like that idea of stabilizing volatility and selling insurance. So let's say you're a believer in Bitcoin, and this comes back to the idea of expressing a trade, right? So one person may express their belief in Bitcoin by holding spot. The next person may think Bitcoin will never ever again go below 30,000 over a 1 month period of time. Like we're trading at whatever it is, 98,000 right now. Bitcoin, I don't believe in the next month will go below 70,000. Maybe that's my belief, my own belief in Bitcoin, as opposed to it will go up at 25% annually. I can get paid a premium for that belief that Bitcoin will sort of be where it is in a month's time. So using both a combination of options contracts and a belief in an asset, I think it's been very successful for a lot of different traders, but it's also a way to stabilize volatility, right? If you're maybe someone who doesn't want to be fully exposed to Bitcoin, but you believe in Bitcoin, but you don't want to experience maybe an 80% drawdown or a 70% drawdown over the course of a year, you could just hold cash, collect premiums for selling insurance. And if you're assigned those contracts for IBIT, you're assigned those shares, you'll just purchase IBIT and continue holding forward. So put selling is one way to express that trade. Call selling, right? Maybe you don't think there's as much upside as other people believe, and you can sell calls against your shares to generate income. And what I've noticed on both Twitter and YouTube with just the inbound I'm getting is that more and more people are really, really interested in selling the volatility on these different equities, both Semler and MicroStrategy, in order to generate income. They're saying, okay, I'm holding, X number of MicroStrategy shares, and I'm not too worried about capturing the full upside. What I want is income. What I want is money now to pay my bills, to do whatever I want. And I'm fine limiting some of my upside. So if you own MicroStrategy contracts or IBIT shares, you can say, I'll give you the right to purchase my MicroStrategy shares at a price that's 50% above the current price in 2 months' time. And they pay a premium for that. And so that's what a covered call would be. So I know a lot of people are trying to implement those strategies and generate a volatility premium or a volatility yield on their shares. And I think that's really, really interesting moving forward, especially for new Bitcoin related equities and these companies that are backed by Bitcoin. Because I personally would never sell a put on a company I didn't fully understand or that I knew could fall to zero tomorrow. One belief I have is that Bitcoin, I don't think will fall to zero in the near term or ever, quite frankly. But I don't even think Bitcoin will fall by 50% in a 1 month time frame ever again. I don't think that's necessarily likely. So I'd be willing to sell a put on a company that's backed by a Bitcoin standard based on different metrics. So Bitcoin, I think, de-risks companies, but increases the volatility, which makes for opportunistic options trading opportunities, whether you're holding a company that holds Bitcoin or the Bitcoin ETF itself.
This might be a little bit of a risky question, no pun intended. Is there a straightforward, I'm trying not to use the word simple, but straightforward way to kind of express philosophically what buying an option is versus buying the actual equity, buying the actual stock? Because when you're buying the actual stock, you're buying it, you're holding it, and let's say you're not putting any other instrument or product against it. You're not buying a long option or a put. You're not strangling, you're not straddling, you're not doing anything to anyone or anything. You're just buying a stock. But when you're buying an option contract, you're buying not just one, but you're buying a bundle per contract for the right to buy it in the future. And so there's this increased risk spectrum to both the upside, but not necessarily the downside. Because if you buy one option contract for $1, you could lose that dollar, but you technically have unlimited upside. Is that right?
Yeah, that's correct. I think what you said is a really good way to put it. And people like to talk about all the fancy option Greeks all the time, and it gets really confusing and complicated for someone who's just trying to understand. And I think the options market's a really interesting way to just understand the equity in itself, right? And you'll see online there's all these articles about call skew and implied volatility. The options market can tell you a lot about the sentiment regarding a stock. If there's if the calls at a certain percentage out of the money are more expensive than the puts, right? The right to purchase shares as opposed to the right to sell shares. You can kind of see what direction the market is, pricing the future equity. And I think one good way to think about it is when you're long a call option, right? The right to purchase a not certain number of shares in the future, is you're long the theta, which is the time decay to the date of expiration. And being long the theta means that you think the equity or the underlying Bitcoin will go up faster than the market's predicting. Right? So you think Bitcoin will rise more aggressively over the next year, and you're willing to pay someone a premium to have the right to express that by purchasing Bitcoin or Microstrategy shares at a certain price in the future. You're locking in the ability to purchase this asset at a certain price in the future, betting that it goes, beyond that price in that given time frame. So there's a lot of different constraints that you're betting to go right. Whereas if you hold the spot asset, you are just, there's no time constraint, there's no restriction. You're just simply long the asset for an indefinite period of time, which is a lot different and much less risky. So I think the options contracts, they give you both, I guess to summarize, the options contracts give you both sentiment and more information regarding and the asset or the equity. And they also allow you to express different opinions in trades based on different time frames and expected behavior, both over the short, medium, and long term. So I think they're just a unique tool, especially for your own situation, right? If you're an investor, for a lot of us, we're just people who have bills to pay. And that, like, when you're talking about a optimized portfolio trying to return as much percentage wise every year, you don't include like your car breaks down or you need to buy a super nice car to impress your new girlfriend. Like those things you don't calculate into your portfolio percentage returns, but you can use these option strategies to lock in certain gains and collect necessary premiums, as your life calls for expenses.
That makes sense. Anything else that you think would be timely for us to talk about as we're kicking off the year here?
We could talk about just like, you want to just talk about price and how it affects. I don't know. I like being honest about like talking about how when the price goes down, it's very easy to be bearish. And I guess we talked about it at the beginning a little bit.
Yeah,
Yeah,
yeah.
it doesn't need any more attention. It doesn't need any more attention.
Hmm.
What do you think?
I was saying to someone this morning that no one wants to buy the bottom and no one wants to sell the top. So I don't know. I think when I feel conviction, but not, I'm not like actually feeling physically that great about it, but I have conviction. That's when it's time to buy, and having a plan about what your bills are and what your goals are.
Yeah.
If you need to have a structure to it and it's not an extremely long-term hold, going into each year, could certainly be super helpful. Because otherwise, I mean, we're not, as of now, going to live forever. So, like a long-term hold could be long-term, but it's different for each person, and it's not easy to buy when the price is down, and it's also not, at least for me, it's not easy to sell when the price is screaming higher. So that part
I
of
think
the psychological part of it and emotional part of it's kind of interesting.
Yeah, I think you're totally right. And different people have different strengths. What you're saying is like, I know you're really good at like buying the bottom and having, strong conviction in sustained chop and bear markets, right? And I find myself that's my strength as well. Like we're very good at, when the price is down, you know, bucking up, making the buy, making the options buy if we believe in the direction in the next year, like taking that risk when the price is low. I'm not good at shorting the top with a covered calls or taking some off the top in sort of euphoric moments. I'm not as good at that as I am trying to time those bottoms. And I think that's something that other people do have a much better time at doing. Or there are certain people I know that we talk to that are very good at sort of, de-risking during those euphoric moments. But again, this is all going to kind of getting into more trading mindset. And as you're saying, like there's like long-term holding is overall going to be the strongest strategy over long time periods. And that's why I think having the optionality of a call or collecting premiums allows you to free up your mind and to hold for a longer time period because you're covering short-term expenses without taking too much off the table. So I don't think that it's not a direct answer to what you were saying, but it's something important that we all need to think about and recognize. Like our euphoric moments are sort of bear moments, and how the price dictates narrative. And it's really, especially with social media and all that, all the different tools we have access to online, right? Like if it weren't for social media and the sharing of information, we wouldn't be as successful as we are in the markets with Bitcoin, with MicroStrategy, with different options strategies we've used. I know, at least for me, I would not be nearly as successful if it weren't for the access to this information. However, the knife cuts both ways during the kind of euphoric bubble moments or times when things get a bit out of hand. You have no backstop because the internet tends to act as an echo chamber a lot of times. So, take it the good with the bad and understanding that you have to make the right decisions for yourself at any given point in time. And no one on the internet will answer the questions that you really need to answer when it comes to your, portfolio.
Yeah, the two things that come to my mind are, for better or for worse, experience is the best teacher. So if you've been through, I mean, with this amount of volatility, I was speaking with a couple guys yesterday about the fact that Bitcoin, from the time that you are introduced to it and decide, hey, maybe I want to buy and hold Bitcoin, depending on where you have been in the historical cycle, it might go straight up, it might go straight down. It could be 2, 3, 4 years before, assuming that you hold it for that amount of time, before you're like, oh, okay, now I'm really starting to understand the volatility, and I'm in the green on the trade.
Mm.
Whereas with some of the increased volatility in these equities, if the volatility is extreme in both directions, every few months, or potentially even every few weeks, that could, at least in theory, accelerate that cycle of people gaining that experience of peak to trough with that volatility. And so I think that's interesting, just as far as with each, if you can call each couple of months of volatility up and down a cycle, maybe that would bring more people in and educate more people from the top of the funnel, so to speak.
That's a good point. Yeah, I've never thought that way and talked about the shorter price movements as cycles, but you're completely right. They are. Right. There were plenty of people who bought the 520 MicroStrategy price like a month ago and wrote it down 50%. That's a cycle, right? That would be a cycle for a lot of, Bitcoiners as well, a 50% drawdown. So you're totally right. There's cycles, and you have to somehow learn what that feels like, because understanding it mentally and then feeling it is two different things.
Absolutely. I enjoy the surveys that Fred puts out, right? Like, how are you coming into the new year? Are you happy? Were you irresponsibly long? Are you now irresponsibly poor? Like, what is the situation? um, and so experience is the best teacher. And then I'm might be blanking on whatever else I was thinking. Um, the mindset, I guess, at least for me personally, when the price is down, first of all, it doesn't feel great. Second of all, um, continued study and analysis. So, is there anything that's fundamentally changed um, that I have as an input that would change my view and change my conviction? If the answer to that is no, then I guess the next step for me is okay. At that point, um, over days or weeks or months, where is this trending? Like, does it seem like the sentiment is right now everybody's irresponsibly poor, and like, we're not necessarily trying to time a bottom, but also not trying to catch a falling knife, so to speak. So once you've kind of bounced and everyone's kind of shaking themselves off and 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 it seems like sentiment's improving, so to speak, as just one indicator, then maybe that's for me when it's like, okay, time to push some more chips into the center of the table, so to speak. And all of that just to say, when you do get these omega green candles and everybody's euphoric, to really, again, through experience, for better or for worse, based on that experience, then to almost still have that very somber, serious outlook while everyone's in euphoria. Like, okay, no matter what happens, I still, right, as a pilot, you still have to fly the plane. I actually took flying lessons and did not get my pilot's license and that's a story for another time. But like, one of the lessons I learned was, even if the plane is on fire, you still have to fly the airplane. So, if there's any point that I'm rambling on about to try to get to here, it's maybe just when you do hit that euphoric state, maybe to still be somber and just see what's going on, even though you're up in the plane, up in the clouds, and everybody's having fun and it's a beautiful day. Like, okay, well, I'm still flying the plane. I'm still looking at my checklists and what is on my checklist. Hopefully you have a checklist. And then what's on my checklist? Oh, take 20% off the top. Well, like, I'm not trying to time the top. I'm just trying to go by my checklist. I need to fly the plane, and to just have that amount of seriousness and consistent, even keeled approach to it in the bottoms and the tops.
Yeah, that's a really good analogy. You're completely right. It
I mean,
feels like
yeah.
the plane's on fire when everything's going up. It's really hard to stay sober. I've been using the term sober thinking. And it's like, it's very hard to stay sober, both when the price is going up and when the price is going down. It's very hard to stay level-headed and focused. But you're totally right. I don't know. I guess that's investing and that's trading.
Yeah.
It's the emotions. It's the hardest thing.
Well, and hopefully, I mean, this is always helpful for me to think through. And if it can be, thought provoking or helpful to just one other person, because by the time that someone's listening to this conversation, right, it might be a couple of weeks or a couple of months from now. And, it might be a trough, it might be a valley, or it might be somebody, flying the plane on a beautiful sunny day. Everything's clear and everybody's high-fiving. So kind of good to have a plan and a steady outlook in both directions.
Totally.
Awesome. Any closing thoughts, and where can people find you on the World Wide Web?
Thanks, Tim. It's always good to talk to you. I learn a lot being on these podcasts and hearing from you and your expertise. It seems like you're, learning at an exponential rate because of all the high profile guests you've had on recently. I'm just trying to soak it all in. In terms of my content, I have a YouTube. It's Dan_NGU. My Twitter is Hillery_Dan. You can find me either of those two places. My Twitter has both my just off the cuff thoughts and some of my analysis that informs my decision making. So that's where you can find it.
Awesome. Well, onward and upward for 2025.
Exactly.
Thanks, Dan.
Thanks, Tim.